Good morning, good afternoon, good evening. This is Alpha Trading coming to you live. My name is Bilbo, and I'm here to give you a little bit of education on divergence between price action and returns. So put your seatbelts on. This is going to be a fun ride. Okay, first of all, what is divergence? How do you spot divergence? Go over on a little handy chart provided on the interwebs. Okay, so there's two types of divergences that I trade. Okay, there's regular divergence and there's hidden divergence. Regular divergence is trend reversals. Hidden divergence is trend continuations. And so take, for instance, regular bull divergence. When you have a regular bull div, you have a lower low on price action, as you can see on the chart here, and you have a higher low on the indicator. When we're talking about regular bear divergence, you're going to have a higher high on price action and a lower high on the indicator. Now, when you go over to the hidden types of divergences, hidden bull divergence is when you have a higher low on price action and you have a lower low on the indicator. Hidden bear divergence is when you have a lower high on price action and a higher high on the indicator. Now, there's some weak divergences, things of that nature, which I really don't play. These are the two types. I want to know when there is a trend reversal coming, and I want to know when there's divergence printing that's going to tell you there's going to be a trend continuation. And you'll see these all lead into each other as well, just like volatility, expansion, and contraction. They always lead into walk-ups or walk-down in price action with a pump or a dump coming after it. And that's what we just saw. But we are on divergence right now. We'll get into the volatility at another time. So let's go over onto, here we go. So the indicators that we use at Alpha Trading are return oscillators, okay? This top oscillator right here, this is our returns oscillator with alpha square, alpha momentum price. That's these very shaded columns that you see. That is the R squared between returns and price action. What is R squared? It's a statistical formula. It's called the coefficient of determination, and it's going to tell you whether or not what you're seeing on the returns and price action. So when you get a move on the returns to the downside, the coefficient of determination is going to tell you whether that correlation is increasing or decreasing. Okay, it's a powerful part of the indicator. And we also have our RMS Z-score, our root mean square Z-score. And we have a couple different inputs. You can have it be the Z-score for price, or you can have it be the Z-score for the returns. And that's what we're using. When I'm looking at the Z-score for divergences, I have that input turned on for mean of returns. Right there. Use mean of log returns as source. All right, so now let's get into some divergences. First, we got a 4-hour chart here. Let's go back to the $10,000, $11,000 dump we had literally, when was that, on about the 6th? Yeah, a couple weeks ago. Well, not a couple weeks, close though. So let's go back here. Yeah, exactly a couple weeks when we had this $10,000, $11,000 down. Okay, first I'm gonna let's put a little handy little trend line right here. And a little trend line right here. Okay. And then there we go. Okay. So on our returns oscillator, there was divergence building. And remember, a higher high on price action and a lower high on the indicator, that is bearish, that is regular bearish divergence, okay? And you can see how this divergence was building over days, right? All the way from the move from about 50K up to about 53K. We had a few stabs of div, and they played out every time. Okay, first we had, here's a high, here's a higher high. Here's a high, here's a lower high. So did this little stab of div play out? Yes, it did, 100%, right? We got a nice little pullback, probably about $1,500. 49,492. About $1,000 pullback. Price action resumes back up to the upside, right? Of course it does. That's what Bitcoin does. It drifts up. So here we print another stab of bull divergence, or bear divergence, pardon me, right here at about 51.8. Another lower high on the indicator. Did that play out? Yes, it did. We got about 52. About another $1,000 move to the downside. Then we get one more push to the upside. So we've got 1, 2, 3 stabs of bear div first, right? And you can see all the lower highs on the returns oscillator. But from this high to this high on price action, the Z-score hit the 99% probability confidence interval. Then all these little moves right here, especially this high right here, look at the Z-score. Now the Z-score is jumping on the train with the divergence, right? Right when you see this happening, this was a no-brainer when the Z-score picked it up, because look at the Z-score over here, right? We weren't printing. We printed a little. Nope, we didn't print any there either. We didn't print any bear divergence while the returns oscillator was printing. When they both started to print the bear div, that's when we got the major flush. This is how divergence works. And divergence in its essence is just an imbalance in the buy and sell pressure. When you have an imbalance in the buy and sell pressure, that is the main reason that divergence does play out. You've got one side of the team taking control, moving price action one way or the other. The other team is just letting it happen with little resistance. They're storing up their, all of their capital for a move to the downside. And that's what happened right here. The bulls were just having their way, pushing price up, pushing price up. Bears had enough. The divergence plays out. They use their stored up power and they drop the price. And you can see on the Z-score right here, when it turned red. When you see this turn red or blue, the Z-score is telling you there is a statistical outlier, right? What is a statistical outlier? It's when there is a fat-tailed event happening, right? That's when there is a large move to second and third standard deviations, right? If you're talking about Laplace distribution, you're talking about 95.4% level and 99.7% level. Okay, let's see here. So that was the bear div that played out for that $10,000 move to the downside. And I'm going to add here too, that when this did happen right here, for all you people out there that like to trade traditional technical analysis, your beloved RSI and stochastic indicators did not show this divergence. Why? Because in our opinion, divergence between price and relative strength of price is just ridiculous. It has no value to a volatility trader. The divergence you need to be paying attention to are the divergence between returns and price action. Why is that? Because the returns are going to tell you when that return on your investment is diminishing. That's what is also going on here. When you see these lower highs on the returns oscillator, it's telling you, hey, great investment, it's running out, right? The returns on that investment are running out. And bam, did they ever. So if you're trading traditional TA, you don't see that coming. You just lost all your profit. And because you're using traditional technical analysis risk management strategies where you're over here, well, I'll put a stop loss at this data set right here, RECT. I mean, this is what we teach at Alpha Trading. We teach correct risk management strategies, and we teach divergence between returns and price action. That's just two of the things. Okay, so let's get this off. Now, let's go to this latest little move here. Why we're pulling back right now. Dun, dun, dun. What do we got setting up again? That was from that high right to there. Boom. First, we'll start with this one. Show you how this worked out here. Put another line here. Boop. And yes, that did play out. Boom. Got another one there. Okay, there we go. So you can see here, we've got higher highs on price action, right? Higher highs on price action. Even from this high right here, you can see this data set is higher, right? So I don't even need to put a line from here to here. I mean, you can plainly see that. I just wanted to show these two areas where we did have these playouts on this 4 hour. So, you know, the first one happens. Look at the returns oscillator. Here's the high. Here's the high. Higher high in price action. Returns oscillator. There's the high there. Did we get a little playout? Sure did. And it wandered for a couple days. It looks like 2.5 days, 48.4. $2,300, actually $2,000. Okay, and so then as these stabs, right, we get another stab of bear div, lower highs on the oscillators, on the returns oscillator and the Z-score that's set to, it is showing you the Z-score of the log returns. So we get this second stab of div, down we go, right? And we're going to be just touch 42.3. Approximately 42.3. Very interesting. So this is how powerful, when you're using divergence between price action and returns, is, right? Now I'm not saying that some useless indicator like an RSI won't pick up divergence sometimes, but guys, it's literally useless. Most of the times, by the time a traditional technical analysis oscillator is showing you divergence, the move is literally almost over. So when you use the divergence between returns and price action, you will see a difference immediately on how price action definitely responds to that divergence. Now let's find some bull div, shall we? And here's something really interesting too. I'm going to give you a good example of, yeah, it showed better on the Z-score, just since we're over in this area real quick. Let me show you here how we got this little bump in price. What caused this little bump in price? A little continuation divergence, right? A little continuation divergence. Boom. That is hidden bull divergence, right? You've got a higher low on price action, and you've got a lower low on the indicator, right? Before we were showing you regular bear div, and usually is what happens when you are in a trend to the upside and you do get some bearish divergence, right? That first stab and it did pull back, it will create hidden bull divergence telling you, hey, trend's not over. We're going to get a little continuation off that trend. It's exactly what happened. Boom, boom. You can see it plain as day. And if I go there, it was actually, it did show. Let's go right back over here. Boop. Yep, it did show. Just one. There we go. So it was on both oscillators, the Z-score and the returns oscillator. Or wait a minute. Goodness gracious, Scott. Cancel that. Boop. Okay. Yeah, it was just on the Z-score. Okay, so that's some hidden bullish divergence that did print on the Z-score. Now let's find some. There we go, right there. So what caused it? So on this 4 hour, I'm going to show you some good old bull divergence. That was a tricky little booger right there. Let's see. Yep, did play out though. Beautiful. And the Z-score actually on both of them. That's why, I mean, there was bull div building all the way. You see all these little up moves, boom, boom. These were building. You can see the higher lows on both of the oscillators here. But I just want to do the main move when we bounced out down there around 40. What did we get down to? 43.3 last time. how many ever days ago? Last week sometime. So we've got lower highs or lower lows on price action. Then we've got higher lows on the oscillators, right? Boom. Then we play out. We come back up from 43 with that hidden bull, and we got the little bit of continuation. So it was over a $5,000 move back to the upside after we had that big dump, right? Okay, let's there's some good bull div. Let's find some more. You know what? I'm even going to crank it up. Let's go to a daily. Scale this back down a little bit. Oh, yeah. Go. Let's see here. Yep, there's a good move. There's a good move. All over. I mean, when we were on our run up to 65K, there was bear div playing out. All this is bear div, right? Here, I'll give you a couple examples. Let's see here. Yep, it's on ZScore too. Didn't start building till a little after the next data set right there, this is what I look for too. When it's not showing, when there's not divergence showing on the Z-score, once it does print, you pretty much know when they're both lining up and you get this lower high here, this lower high here, that we're getting ready to get a nice pullback. Let's go to the top here. Boom and boom. Because this was an interesting move right here. This was a couple stabs that ended up playing out. And Z-score as well. Yeah. Yep, right at the end. There we go. Boom. Actually, yeah, let's do that stab. So, you can see, you know what on the Z-score? Yeah, let's get rid of that. There it was all the way back there. Excuse me. There we go. The Z-score came all the way from that data set. Powerful, powerful, powerful. That's why we got that nice move from the 65K high, right? If you remember correctly. Goodness sakes, the first down move was about 20K, and then we got an extra, when it got all the way to the bottom, yeah, I mean, guys, I think pulled back almost 40K. Crazy. Crazy, crazy, crazy. Old Bitcoin, gotta love it. So why does price action move like this? Guys, it's a random market, right? Geometric Brownian motion. There's a lot of people that like to deny that. Now, this is why we trade volatility, probability, and statistics, and we use divergence between returns and price action, because we are in a random market. 90% of the time, Bitcoin is in randomness, and we have an entropy indicator that will show that. So yeah, very powerful. Let's find some other on the. Yeah, this is what I wanted to see right there. Let's get some bear divergence, huh, shall we? So this is, bam, we started coming out of that low at 28K. We got down there. Yep. That's what started this move to what we're doing right now. Let's take a peek here. Was there any on the Z-score? The Z-score was building over a long period of time. Actually, so was, yep, I'll put that in there. This is pretty much coming, wow, from all the way back there. So this is the lowest low we had on the Z-score when we started dumping. Boom, there's that. You can actually move that up to that stab right there. There we go. And, yep. Let's make one more line back here. So we're pretty much talking about almost this everything about this, right? This whole freaking move was just started to create div. Boom. You've got lower lows on price action. You got higher lows on the indicators. And it finally took us right back out of this hole. Let's see here. Oh, yeah. And even on a daily. So that was a bull. This is a no-brainer right here. We're going to get this next move down. Right. Yeah, that actually was from that right to there. Hey, there's two different good examples of how bear div created these nice big daily candles. And by the way, today this daily candle was a fat tail event, right? Hit the third standard deviation normal distribution to the dollar. 23.90. Let me see here. What was it at? Yeah, $42,367 was the third standard deviation normal distribution. Price got down to $42,416. Wasn't exactly to the dollar. When you're talking about an asset over $40,000, pretty good move. This is why we trade this. Oops. There we go. Okay, so that is showing, and obviously you can see it's playing out on the Z-score too, right? See the lower highs? Bam, 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 bam. Okay. So divergence was being shown on both of the indicators. Here, I want to go up. Let's get on Bitcoin index. Do some higher time frames. There we go. Look at that beautiful Bitcoin. So this baby on log, shall we? Boom. There we go. What bear markets? Kidding me? Bitcoin's a beast. Let's see here. Okay. Yep. So on our returns oscillator, now this is a monthly, right? This is a monthly. Here was the, that was the low of the scamdemic. Boom. This is good to show like on these higher time frames. Right, this is a monthly chart. That is hidden bull divergence. It's telling you that there is continuation of the trend. So let's see else. But there is, so on the Z-score, right? And we're talking about, this is a monthly chart, right? Here's the 20K high, right? The run up started September of 2015 at $230 all the way to 20K. Dun dun dun. Look at the Z-score. All right, whoops, let's go back here. Bam. And so you see there's a higher low on the Z-score. But let's see, is that, yeah, actually a little bit of hidden bear. That's why you're seeing is what this is on the monthly right now. So when we originally got this pullback from 65K down to the 28K area, that was bear divergence on a monthly, right? Lower high on the indicator on the Z-score, higher high on price action. Now we're having this late move back up to 53K was hidden bull divergence. Okay, hidden bull divergence on the returns oscillator, which is telling you that there is a continuation of that uptrend from that low back there. But now we'll see how this monthly candle ends up. Here, we get rid of all those others. Now you're having a little bit of hidden bear. Now you're having a little bit of hidden bear, saying that you're getting a little bit of continuation off of this bear move we had down to 28. So it's a continuation of trend. So this will actually be interesting to see what happens with Bitcoin. Really will. Because on these higher time frames, we are having a little divergence plays. Let's go to a weekly and see what this looks like. Let's scale this up a little bit. Yep. It's actually not showing on the returns oscillator, but we are setting up hidden bear right now on the weekly chart, or have been setting up from that 53K high. There you go. Lower high on price action, higher high on the oscillator. Hidden bear divergence, telling you continuation of this trend right here. How far does that continuation go? We'll find out shortly, won't we? Bitcoin could be ready to knock people's teeth out. We'll see what happens. This is why we trade volatility. The only way to trade random markets is using volatility, probability, and statistics. Some people have to find out the hard way. That's why 90% of traders lose 90% of their account within 90 days. The 90-90-90 rule. It's like people just want to ignore that. No, I'm part of the 10%. Okay, good luck. This is why we trade the way we do. Now let's see, is there anything else set up here? Yes, there is. But see, then you get, and this is right, this returns oscillator is right at the zero mean. It's a little bit below it on this weekly. But it is printing. It is building. Not printing yet, but it is building as we speak. Hidden bull divergence, telling you there's going to be a continuation of this trend. And to be honest, on the oscillator, this hidden bull is going to be valid unless price action gets below 31.6. Okay, so I mean that's another $12,000 down to knock out that hidden bull. So that can play out at any time. Continuation right back up to the upside. Okay, let's try now. Let's go to some low time frames. Here. My bread and butter right here, ladies and gentlemen. 15-minute chart, and look what's happening right now. Okay, so we get this big dump. This is actually beautiful. There's going to be all kinds of fun lines on this chart. Let me, real quick. There we go. Got a little fat phobia with my lines here. Let's bump them down to a respectable, nice skinny level. Okay. If you have any questions about divergence, come join the Discord. In my opinion, I'm one of the more knowledgeable people when it comes to divergence that are out there, especially in the crypto sphere. Most of them are using traditional technical analysis, which is kind of a shame. Just hasn't got it yet. You see all this? You see all this bull div building on this 15-minute chart? Wouldn't be a bit surprised. I mean, this has been building for a while, since we started coming down from about 47 to 50. All right. And there's little stabs all over the place, right? There's little stabs all over the place. So right here, right? You can see, bam, there's another higher low on the indicator. So we get that little bump, then whoop, right back down. So there is a lot of bull div, as you can see, playing out right now in the 15-minute. And it's just stab after stab after stab. Higher lows on both of these oscillators. So where would a bounce be looking to? Let's take a peek here. Probably mid 44s, something like that. 45. Because remember, this is a 15-minute chart. I'm just showing you how powerful these divergences are. Let's see. Let's go back here. Oh, yeah. Oh, yeah. So when did all this move start? I'm about to show you. Yep. Yeah, little stabs all around. But look, all right, higher high on price action. This is what stifled the price up here on the 15-minute when we were up at, yeah, almost back at 49. Lower highs on the returns oscillator. And I can damn well guarantee you the RSI was not showing it like this. Let's see, the Z-score, right? At the Z-score, it starts building at this data set, right, where we really took off, literally, whoop, right to the top. Lower highs on the oscillator. Right about there, we start to get a statistical outlier on the Z-score. I mean, it's been down ever since. Just dropping slowly on the fit, and that's a 15-minute chart. Look at that slide, right? And this, it all started from back here. But you'll be able to find all kinds of little stabs of divergence along the way. These up moves, these little down moves, until this really, really played out. Let's see, is that the high? Yeah, you can see from this data set right here, everything. This one, not so much, but what created? Is that a higher high? Yeah, that's actually weak. I usually only play weak div, but that was weak div. Played out this nice little move here. But all these are lower highs through all of this. Powerful. But like I just pointed out, now we're building the divergence the other way. We're building that bull div. I'm going to go down in what most people call no man's land. You should not trade the 1-minute chart. Bah, humbug. Got plenty of people in this Discord to trade a 1-minute chart. Let's find a little divergence here, shall we? That's what's happening right now in the 1 minute. We're getting this little bump, right? What is that? It's hidden bull. Like, it doesn't matter what time frame you're trading, divergence is going to rear its head. And divergence moves the market. Why? Well, because it's the imbalance in buy and sell pressure. When you have an imbalance in buy and sell pressure, it's exactly what you're going to see. Like I showed you on that 15-minute, I was talking about mid 44s, maybe 45 off that 15-minute chart. We'll see. There you go, right? Returns oscillator, price action, hidden bull divergence. Let's see here. Boom, there's some hidden. Yeah, there's some bear div right there. This is just building on the 1 minute, right? Build over a long period of time. And we had a big 1 minute flush. Why did we get this little crank back up to the upside here? I'll show you why. Let's see. Find it. Yep, there it is. Actually, it flipped. It went to bull div. Yeah. So you got bear div, drop, creates bull div, pump. Let's see here. Yep. I mean, I go through this 1 minute chart. There is divergence all over the place. There always is. If you're a 1 minute scalper, guys, this should be playing a huge role in what you're doing. Huge. Oops. There you go. Little bear div. Nice little 1 minute down move. And we're talking about, we got 44. Yeah. Talking $250 1 minute moves. Powerful. Powerful when you're 1 minute scalping. Let's see here. But look what's going on right now. Okay, bear div. And look what's happening to the price this 1 minute. Bam. Stifles price action. Boop. Let's go back down a little bit. ZScore 2. Okay, ZScore 2. Lower high. If you want to learn divergence, go down to a 1 minute. Watch the divergences populate. But for crying out loud, drop the RSI, drop the stochastics. Come see us at Alpha Trading, right? The link to our Discord is in the description. Got to pass a little verification process. We want to make people that are wanting to do this are serious about what their goal is. We are a great community of traders. Come check us out for sure. But like I said, drop the traditional TA. The divergence plays between price action and returns. I mean, you can't even put a value on it, how powerful it is. And wow, look at that flip around real quick. Powerful, powerful. And this is a 1 minute, right? So, yeah. If anything, if you don't see higher highs on these oscillators, if you don't get higher highs, what's it doing? It's just building more bear div. That's how divergence works, right? But when you trade the way we do at Alpha Trading, there's 3 rules to become a profitable trader, right? First one, obviously, you take your profit. The second one is you limit your loss. What happens right there if you see, okay, that's a good div play, let's get in it. Man, that thing turns around. You're limiting your loss. You're probably not taking any loss at all. You're going to market out of that position immediately because you never know. It's random. Bitcoin can just fly off the rails. And the third one is you do not become emotionally attached to your trade. When you're not emotionally attached to your trade, you are able to take your profits and you're able to limit your losses because it's not about the trade. It's about becoming a profitable trader. And if you just follow those basic 3 rules, and you study, you will become a profitable trader at some point. There's no doubt about it. And so you can see right here. So what did that move just do? It's just building more bear div. Lower highs on the oscillator, higher highs on price action. There was not any higher highs yet on the oscillator. So when you get a buildup over time like that, it can play out with a big 1 minute move. We'll see what happens. But that's pretty much going to wrap it up for the divergence. And it's going to take a little time, right? You should get to the point where you don't have to draw lines on your chart. You will be able to spot divergence. I see divergence in everything. It's almost a curse, but yeah, people close to me laugh. Get to that point though. Study divergence, see it on the chart, wait for confirmation, take the trade. Never trade divergence by itself. This whole educational video was just showing you how to spot divergences and how divergence plays out, okay? But you need to use more indicators for confluence, right? You need to use more indicators for confluence when you are trading divergence. So keep that in mind. Sure, this is, yes, 7. Okay, so is what we're working on right now. So now if you watch my divergence video, right, you've got really 2 main types of divergence. You've got regular bull and bear divergence, which are going to give a warning out to you that there is a trend reversal in the making, that it is a possibility, right? When we volatility trade, it's all about probabilities. And if there's a high probability when you have regular divergences that you're going to get a trend reversal. Now, the hidden types of divergences are telling you about trend continuation. And that's what we're seeing right here on the monthly chart. When you have a lower high on price action, right? When you have a higher low on price action, like you're looking at right here, but then you have a lower low on the oscillator, that is hidden bull divergence, and that's pretty much flashing a sign at you that says trend continuation. Which way was the trend? It was to the upside, but that can work both ways. Giving me a little extra divergence training here, because at the same time that's happening, let me scale this up, bring her down. Okay, so from this trend right here, we had this little bit of a pullback. I might as well start at the beginning. It's party time, right? Why did we get this pullback on the monthly chart? And I'm going to say this, if you ever hear some clown out in the trading world talking about divergences bullshit, know immediately they are a clown and that they don't trade. They don't understand how to trade, and they never will. I got one guy specifically in mind, total clown. But anyway, so we get this big move, right? We get this big move. That was the 14K high after the dump to 31, right? Here's the 20K high back here. Boom. We get the dump. We get the pull back to 31. Then we pump up to 14K. All right. And now, why did we get a down move here? Hell, I should have went all the way back. Well, because let's have fun. Let's just have fun and show all the clowns out there how divergence moves the freaking market. Because that's exactly what's happening. It's all buy and sell pressure, imbalances and buy and sell pressure that move the market. I don't care what anybody says. 20K high, right? We get the pullback. The next high is a lower high on price action, but you got a higher high on the oscillator. What is that? That is hidden bear divergence, and that is telling you about continuation of this down move. That's exactly what we got. And we actually got to move down to 38, right? This is right along where everybody's like, oh, black swan event, COVID, whole planet's going to die. What a joke. Anyway, get off that subject. There's never black swan events when you trade volatility, probability, and it's always in the charts. So you get this move back up to 14, hidden bear divergence. We get some continuation to the downside, right? This is great. Okay, so then now what started the up move that we got from that 3,800 low? Well, looky here. What is this? Whoops. Okay. Higher low on price action, lower low on the oscillator. Hidden bull divergence. Now that's telling you, hey, we're getting ready to have trend continuation of the previous trend, which was to the upside. So we get this move, right? We had this down move here. Hidden bear. There's going to be continuation of this down move. There's that continuation. Then it prints hidden bull, telling you we're about to get continuation for this up move. Now, from this position to here, we actually print bear divergence. That's why we got such a big pullback. And everybody remembers, God, guys, it was almost $40,000 pullback. Woo! It's like 38K or something. 65 to 28. It's a hell of a move. So, but is what's happened now is that we printed some hidden, right? We printed hidden bull telling you, hey, there's going to be continuation on this up move, was what we did right back up to 53. But now, since you see how divergence is moving the market, and we're on a monthly time frame. Can you imagine if you trade the monthly chart? Just sit back, relax, trade the monthly, look at div, look at volatility, enjoy your life. Don't be a maniac like us trading a 15-minute time frame. Let me erase these. What's happening right now? I'll show you what's happening right now. Where was that little move from? Boop, boop, boop. Ah, was that on ZScore? Give me a second here. Let me pull up the ZScore real quick, because there is, and that's why you got to have them both. You got to be using them both. And when you use the ZScore, you want to have it on log returns. Switch this up real quick. For those of you that are lucky enough to have these indicators, good on you. Yep, it was on ZScore where I was seeing it. Bam, hidden bear on the ZScore. And so this is possibly this monthly candle. Now this isn't very strong, in my opinion, at all. And literally this monthly candle could be the continuation, right? Could be the continuation of this down move, and we just get one monthly candle to the downside. That's what I'm going to be keeping my eyes on, right? That's what I'm going to be keeping my eyes on. Because say this comes down, say like by the end of the month, we get a move down to, who knows, 35 again, 30, who knows, right? And this turns down a little bit, you're still going to have this hidden bull divergence, right? Hidden bull divergence from here, telling you, okay, that month was hidden bear. We got a monthly candle pullback. Now we're going to continue the trend to the upside. This is how divergence works. Hope everybody understands that. I can show you on a 1 minute chart how divergence is totally, how the imbalance in buy and sell pressure is literally why the market's going up and down in a random market. People are like, you can't track randomness. Oh yeah, you can. You got to know how though. First off, you got to trade volatility, probability, and statistics. Second of all, you need to be looking at divergence between price action and returns, not price action and worthless RSI or stochastic indicators or MACD divergence, all that bull crap. You're going to get wrecked. You want to know when the return on your investment is diminishing, whether you're in a long or a short. And that's why when you're using divergence between returns and price action, that's the real move coming. It's like a warning sign. Hey, your return is diminishing. Time to get out. Take your profit. Get in the other position. And then when you see those returns diminishing to the downside, time to get out. Get in the move to the upside. It's always creating divergence. And that's what moves this market. I just gave a great example. And we're out of time, ladies and gentlemen. Might have to put the oxygen tank on too. I don't know how much breath I took. Thing. If you're watching this for the first time on YouTube, obviously you maybe you don't quite understand what's going on, but if that didn't ring some bells, that hour video, we can't help you to begin with. If it did ring some bells and you see something interesting, give us a thumbs up first of all. Tell us you like the video. Leave a comment. I don't care if it's a bad comment. Woo! Help push that algo, right? Definitely subscribe to our channel. You're going to want to know when we put out our daily videos, Monday through Friday, 2 p.m. Pacific Standard Time, along with a lot of educational videos that are going to be coming out. You're going to want to know when those come out. If you really want to learn, you'll have a basis to start from. You can watch videos over and over and over again until you get it. And that being said, wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. Alpha Trading out.